Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets hidden within corporate filings. And today, oh boy, do we have a juicy one for you. We are diving deep into a quarterly report that reads more like a drama series than a financial statement. Get ready because AmBase Corporation's September 2025 10Q filing is a wild ride. So what exactly is AmBase Corporation up to? They filed their Form 10Q for the quarterly period ended the 30th of September 2025. And let me tell you, it is not your typical corporate update. This is a company that seems to be perpetually navigating choppy waters, primarily due to massive ongoing legal battles surrounding a real estate development project in New York City. Looking at their financials for the 3 months ended the 30th of September 2025, we see total operating expenses came in at $985,000. Now that might sound like a lot, but it is actually a significant drop from the $1,523,000 they spent in the same period last year. When we go to the 9-month comparison, it also shows a big decrease, about 30%, from $5,253,000 down to $3,648,000. This reduction is mainly because they are spending less on professional and outside services, which includes legal fees. And what is the bottom line? Well, it is a loss for the 3 months ended the 30th of September 2025. AmBase reported a net loss of $1,091,000. That translates to a loss of about $0.01 per S-hair. Now this is better than the $1,533,000 loss they had in the same period last year, which was $0.02 per S-hair. Taking a look at the 9 months, the loss for 2025 was $3,766,000, or $0.04 per S-hair, down from a whopping $5,307,000 loss in 2024, which was $0.08 per S-hair. So they are losing less money, but they are still losing money. Now let's talk about cash. At the end of September 2025, AmBase had just $239,000 in cash and cash equivalents. That might sound really low, and it is frankly. This is a big concern when you look at their total liabilities, which stand at a staggering $8,130,000. A huge chunk of those liabilities, $3,200,000 in fact, are loans from Bianco. And that is not all. There is another $2,000 owed to Bark Investments LLC. These are not your average bank loans. They are from individuals or entities closely connected to the company's management. This is a classic sign of a company that is struggling to get traditional financing. And the overall picture for stockholders' equity is not pretty. It is a deficit of $7,891,000. That negative number means technically the company owes more than it owns when you consider the value of its stock. Let's look at those per S-hair numbers again. For the 3 months, the loss shrunk from $0.02 to $0.01. For the 9 months, the loss per S-hair went from $0.08 down to $0.04. While shrinking losses is a good thing, it is still a loss. The company is not profitable. Now this is where things get really serious. In the notes to their financials, the company explicitly states there is substantial doubt about their ability to continue as a going concern. That is legalese, for they might not be able to stay in business for the next year. They admit their cash might not be enough to cover operating needs, and they need to raise more capital through selling stock or borrowing. They are also exploring litigation funding agreements, which can be very costly for the company in the long run. It is not a good sign when a company itself says it might go under. The root of many of AmBase's problems lies here with their investment in the 111 West 57th property. Back in 2013, they put a significant amount of money into this real estate development in New York City, but major disputes and lawsuits erupted. They even recorded an impairment for the entire investment in 2017. That means they considered that massive investment essentially worthless at that point. Despite ongoing litigation, they are still fighting to recover some value. And the legal battles are extensive, to say the least. We're talking about multiple lawsuits AmBase Corp et al. Versus 111 West 57th sponsor LLC et al. Then AmBase Corp et al. Versus Spruce Capital Partners et al. And others. These are complex, lengthy, and extremely expensive legal disputes. The company is alleging breach of contract fraud and interference with their rights. These legal fights are clearly draining their resources and attention. Remember those loans from Bark Investments LLC, they are for working capital and are due in 2027. While they might seem like just another debt, they highlight the company's reliance on related parties for funding. Interests on these loans are also accumulating and adding to the company's financial burden. Bianco is another key figure here. He has provided several loans to AmBase totaling a substantial amount. These loans also come with a 6.50% interest rate. It is important to note that in April 2024, AmBase did repay a significant portion of these loans using funds from an equity offering. However, new loans have been taken out since then. This back and forth of borrowing and repaying from related parties suggests a company in constant need of cash. In April 2024, AmBase completed a private placement offering selling over 44 million shares for 20 cents each. This brought in about $8.8 million. This cash infusion was crucial. It helped repay some of the RA Bianco loans and likely provided some much needed operating funds. However, it also means that the ownership pie for existing shareholders got a lot bigger, or as they say, diluted. In their own words, management is quite clear about the challenges. They acknowledge the substantial doubt about continuing as a going concern. They list numerous risks, including the outcome of legal and tax matters, and whether their current financial resources will even be adequate to fund operations over the next 12 months. It is a very candid but also very concerning assessment. Looking at operational expenses, compensation, and benefits were actually lower in the first 9 months of 2025 compared to 2024. This shows some effort to control costs in that area. But the big story in expenses is the drop in professional and outside services. This area significantly decreased, likely due to fewer legal fees in 2025 compared to 2024. This could mean some progress in legal settlements or perhaps a temporary lull in legal activity though, given the nature of their core problem that seems unlikely. So what is the big picture for AmBase Corporation? Well, it is a company in a very precarious financial position. Their biggest strength is probably their resilience and their persistence in pursuing legal remedies to recover their investment. They are fighting tooth and nail in multiple high-stakes lawsuits. However, their massive liability, substantial ongoing legal costs, and the explicit warning about their ability to continue as a going concern are huge weaknesses. They are essentially living on borrowed time and borrowed money from insiders. The company's direction seems to be solely focused on winning its legal battles, hoping that a major recovery can bail them out. The risks are incredibly high. The opportunity for a significant turnaround hinges entirely on the outcome of these complex legal proceedings. Without a favorable resolution in those cases, it is very hard to see a positive future. The company is essentially a legal battle with financial consequences. Their limited cash position and heavy reliance on related party loans are red flags waving for all to see. Alright, that is our deep dive into AmBase Corporation's latest 10Q. It's a story of high-stakes litigation and financial precariousness. What are your thoughts on the company's strategy and its chances of survival based on these filings? Let me know in the comments below. If you found this breakdown valuable, please hit that like button and subscribe for more corporate analyses like this. Also, don't forget to join our Discord community linked in the description for further discussions and insights. Thanks for watching, and we'll see you in the next episode of Corporate Decoder.